Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. Let's get into the action. Today, Tuesday, July 15th, 2014, markets are trading slightly lower. We actually had a really nice fall from the opening push up. So again, if you look at the intraday 10-minute SPY, which again mirrors the S&P 500. So this is essentially the S&P 500 which we're looking at. And you had an initial small gap up and then a push higher here for two candles. On the second candle, you began to move back down and you started to fall back down just a little bit. And really what was going on here was Janet Yellen was testifying in front of Congress. And this is, I believe, 2 days of testimony that she's going to be doing. And today she said a couple things that worried the markets just a little bit. Now, it's not a major worry yet. The market's still kind of riding high, especially after Goldman Sachs and JP Morgan both reported good earnings this morning and are both trading up. But again, she basically came out and she said that she thought that some biotech stocks and some small cap stocks were a little overvalued, kind of alluding to that there might be a few areas in the market that are a little bubblicious, if you will. And that did push the markets down just a little bit. Her comments also revolved around them stopping QE in October, which is now firmly in stone. So that's the expectation. October they'll wind down their quantitative easing, which again is already mostly done. It's just got I think there are 25 billion left or right around there. And then also what they're going to be doing here is raising interest rates, and this is something she said. She said they're going to be raising interest rates when we get into 2015. Now the question is when in 2015. I think the fact that she didn't and she wasn't more specific was just a little bit of a concern to the markets. In any case, bottom line is the markets, when we got those comments from her early on, did see a nice sell-off. You had a good sell-off into the 200 right here, a bounce, and then we went into this lower trend line. Now this trend line continues to be one of the most amazing things you will ever see in your life in regards to trading and charts. This trend line here, folks, I've told you about it for ages at this point. We could zoom out and just see this line. See how you were below here and you got above it. You were below here, got above it. Here you hit it again and bounced off of it. Here you were below it, and got above it. Here you hit it. And I could go back for literally months and show you how we hit this line, hit this line, hit this line, bounced, pierced it, bounced, hit it, hit it, hit. I mean, I could go back months, literally months. This area is what I'm calling the greatest wall in the history of post-Fed intervention markets. And when I say wall, I mean resistance support level. In this case, it's a support level. The Fed is supporting this market, and this line represents their support. Now, will it eventually break? Yes, it will. You better believe it will, folks. And that's when the floodgates will begin to open. So what I'm saying here is, as long as the markets can stay above on a closing basis, some of you guys might say, well, oh, it was below here, down here, and it was below here. Yeah, but it never closed the day below. You see what I'm saying? So they got the market below intraday by selling randomly, or whoever, institutions selling a little bit, individual investors, but someone came in and supported the market every single time so that by the close, the markets were back above that area, back above that trend line. And today, no different. I mean, if we zoom in on today, look at the market. Right down into that level, pierced it, bounced right back up. So again, folks, when you get a close below that level, you watch out. This market, in my opinion, has major downside. In addition, we're coming up to a cycle date, and that's going to be interesting. My guess is it all coincides. It all will coincide like a beautiful masterpiece, and then we'll see it. But right now, what you have to understand is the market's above that trend line. So don't be an idiot here. Read the charts correctly. Here's your trend line, and obviously you're above it, and right now if we closed here, you would be closing above it. As long as you close above it, at the end of the day, neutral to slight positive bias. That's that simple. That simple. All right, so right now we're above it, and if we closed here, you'd have a neutral to positive bias on the markets. When it closes below, at the end of the day, not an intraday candle, end of day close, that is where the floodgates begin to open. So something easy for all of us to watch And this is something that I will show you in the coming days and pay attention to. Right now, speak of the devil, the markets continue to rally up, just down 30 cents on the day. Take a look at Goldman Sachs today. Goldman up $1.82, off its highs of the day. They reported earnings this morning. It's interesting, too. One thing I just like to note about that and JPM, if I bring up JPM, look at this, up $2.28, over 4%. But one of the things here to keep in mind is that JP Morgan Chase and Goldman Sachs both were gapping higher, as you can see. And I was actually surprised that the markets didn't open higher this morning. And it was almost like a little precursor, like they knew Janet Yellen's comments were going to be coming out not super positive for the markets. Now, they were not negative. I wouldn't classify her comments as very negative, but they just weren't as positive as they could have been. And it's almost like the market knew that ahead of time, which, in all fairness, they probably did. I mean, her comments are given to the media ahead of time to report at 10 o'clock. And my guess is, it leaks out a little bit. And that's just something we all have to kind of expect, I would say. All right, in any case, when all is said and done, folks, charts are telling us you have a neutral to positive bias right now. There's still a small chance the S&P gets above 2,000, NASDAQ above 4,500. But when that trend line breaks, the floodgates open. All right, simple. Apple today down 75 cents. Interesting on Apple. Apple had a nice day yesterday and really reversing 100% of that move today. That's a little bit of a negative right there. Not a huge negative, but just a little bit of a negative. So we'll keep an eye on that. Baidu today up $1.23. Good bounce there for a Chinese high beta stock. If we look at other beta stocks out there that aren't Chinese, they're actually taking small hits today. Netflix is off its lows, but down about $2.63. And Tesla down about $5, but that's also coming off its lows. So we're seeing a lot of these stocks moving off of their short-term lows intraday as the markets are rallying up, but the high beta stocks for the most part are under pressure. The IBB, which is the biotech index, is off its lows as well, but still down pretty sizably. That's still a pretty big drop for the ETF. And again, we were short right here and we covered right here, and then it bounced up. Now it's starting to come in a little bit, but I might be interested in shorting this if it gives me the right PPT setup. Now, I did pick up a new shorting play today in the Research Center, so if you're a member, obviously you got that. We're already in the money very nicely on it, and that's exactly what I was looking for. I was looking for that exact pinpoint accuracy entry, and again, pulled the trigger, and so far it is looking beautiful as we are getting paid on that. Also, we took profits on MasterCard today. MasterCard was a long trade we had. By the way, this is just a beautiful bullish pattern right here, but look at this move on MasterCard to the upside, and we did take profits, about a 5%, just under 5% gain on MasterCard, which is a great short-term move for just holding it for a week or so. And again, really nice play on MasterCard there, paying us handsomely. So really when it comes down to it, folks, the action is here, the volatility is back, and this is what I love. I love the fact that the volatility is back in this market. I predicted just before July 4th, I said, listen, July 4th is a holiday. You know they're going to lift this Dow above 17,000. They did just that. I said when you get back from July 4th, volatility is going to increase. Just a few weeks into the month, you're going to have a cycle date. That's going to be a major turn in the markets, and it is all coming to fruition. I love the volatility on the market. Look at since July 4th. Look at since July 4th right here. Here was July 4th up 17,000 Dow, and then look at last week, up, down, and then look at this week, do. This means it's great trading, and the profits are already starting to pour in. And again, you can go see our track record at InTheMoneyStocks.com underneath the free market action tab. There's a drop down and you can see Research Center track record. What a beautiful thing as profits again continue to swell. Come join us here at InTheMoneyStocks.com, folks. Profit with the pros. And again, it's a free trial. Can't go wrong. Talk to you soon. Take care.